Good day, everyone. And again, this is your OLC, Ms. Aguilar. And good day and welcome to all my students who are currently watching and listening to this video. So before we proceed with our topic, let's just have a quick review of what we have discussed last meeting. So I will show you a position or title, and then you're going to tell me if they are the internal user of or external users. Okay? So the first one is the CEO. So CEO is what? Internal or external user? Okay, so the answer here is internal user. How about the second one? The manager. Okay, so what could be the answer? Okay, very good. Manager is internal user. How about the number three, laborer? Is this internal or external user? Okay, number three or laborer is an external user of accounting because they don't have any direct control over the financial statement. How about the BIR or the Bureau of Internal Revenue? Okay, BIR is a government agency, and government agency is an example of external user of accounting. How about investor? Okay, investor is internal user of accounting. I mean external user of accounting. And then the last one is the creditor. It is also external user of accounting. So thank you for answering. Okay, let us now proceed with our topic for this day, which is all about the accounting concept and principles. So when we say accounting principles, these are the general rules and guidelines that companies are required to follow when reporting all accounts and financial data. And accounting concept and principles are a set of logical ideas and procedures that guide the accountant in recording and communicating economic information. So they provide a general frame of reference by which accounting practice can be evaluated, and they serve as a guide in the development of new practices and procedures. Also, accounting concept and principles provide reasonable assurance that information communicated to users is prepared in a proper way. Of course. So for example, doctors have a proper way of performing surgery on patient, and the engineers have a proper way of constructing a bridge. So accountants too have a proper way of recording and communicating economic information. So this is to maximize the usefulness of accounting information to the users. So the first accounting principle, but before that, accounting involves the systematic recognition, measurement, reporting, interpretation of data that are related to the financial activities of a natural or artificial person. So processing information in such a way that it would be useful is the primary core of accounting, and accounting is often called the language of business. So through accounting, the businesses can understand each status of the business. And the purpose in having and following accounting principles is to be able to communicate economic information in a language that is acceptable and understandable from one business to another. So that's why it is called language of business. And companies that release their financial information to the public are required to follow these principles in preparation of their statement. So the first accounting concept is the accrual basis accounting. So financial statements are prepared on the accrual basis of accounting. And under this basis, the effects of transactions and other events are recognized when they occur and not as cash or equivalents or received or paid. And they are recorded in the accounting records and reported in the financial statements of the period which they relate. So under it, economic events are recorded in the period in which they occur. It means if when it happened, so when the transaction happened. Okay, and so the income is recorded in the period when it is earned rather than when it is collected. So if there is a transaction wherein you have a sales but then they did not pay cash, so whether they pay the cash today or tomorrow or the other day, again, when it is occur is that's when you are going to record it. Okay, kung kailan nangyari, saka mo siya i-record sa iyong journal. Okay, and next is the going concern assumption. So under this concept, the business is assured to continue to exist for an indefinite period of time. So this is necessary for accounting measurement to be meaningful. And it is also known as continuity assumption. Okay, the primary financial statements of a business enterprise are prepared on the assumption that the normal operation of the enterprise will continue indefinitely. So for example, measuring assets at historical cost is appropriately when the business is going concern. Okay, it means the company doesn't have a definite time or date when it is going to close or dissolve. Next is the business entity principle. This concept assumes that the business and its owner are separate and distinct entities. And as such, there should be separate accounting and reporting of the transaction, resources, obligations, income, and expenses of the business and those of the owner. So because of this assumption, better monitoring and reporting of the activities, profitability, and financial condition of the business enterprise would result. So even though you are the owner of your own business, but still your money is different from the money of the business. And the money of the business is different from your own personal money. So you really need to do that in order for you to monitor your business, the income or the revenue of the business. And if you're going to get your money or withdraw money, you still need to record it. Okay? The next is the periodicity concept. So the assumption that the operating life of a business may divided into time period is known as the periodicity concept or time period concept. And accounting periodicity refers to the equal length of time or relatively short periods of the economic life of the organization. The use of equal time periods for reporting purposes is helpful so that the reported information would have the qualities of timeliness and comparability. And as you can see here, there is two types of year, which is the calendar year and the fiscal year. And when we say calendar year, if it refers to a 12-month period ending December, so it starts with January and ends with December. But when we say fiscal, it is when you're starting the accounting period at any month other than January. Okay. And we also have this interim period. So it could be month or monthly, quarterly or 3 months, semi-annual or 6 months, and the annually, which is the 1 year. Okay, we need to have that for a systematic way of reporting the financial statement. Next is the monetary concept or the monetary unit assumption. So this concept guides the accountant when applying accounting principle. This is because accounting principles are applicable only to material items. No, okay, so monetary unit assumption covers the quantifiability and stability notions And monetary unit assumption states that the elements of financial statement must be measured in terms of peso. Of course, if it is here in the Philippines, so we must use the peso concept. Okay, and of course, if you are creating a financial statement and if it is not consistently using the peso monetary unit, then I think there will be a confusion with the computation. And next is the matching concept. So it is assumed that the result of business operations could be measured if there is a proper matching of income and expenses within a reporting period of time. So there should be a simultaneous recognition of income and the corresponding expenses that are directly related or indirectly contributory to the earning of such income. So for example, you earn something, so you must also record your expenses because there is a cause and effect, and you cannot um you cannot render or have an income without having an expenses. Okay, so it is automatic that if you have an income, you also have expenses. Next is the revenue recognition principles. In accrual basis, accounting revenue or income is recognized when earned regardless of when received. It means that income is recorded, the service is fully performed, or when sales occurs. So pag sinabi nating revenue recognition principle, hindi sa kung kailan ka binayaran. I mean, kung kailan mo ginawa yung service or yung sales, kung kailan nangyari, whether binayaran ka or hindi, yun yung i-recognize kung kailan nangyari yun. And same also with expense. Kung may expenses ka, or regardless ng binayaran mo na o hindi pa, so that is also the time when you are going to record your expenses. And historical cost principle, items in the balance sheets are generally presented at historical cost. So nonetheless, some accounts are measured using other bases such as fair market value, current cost, discounted amount. So you will learn more about them in the intermediary. So, and under this concept, assets are initially recorded at their acquisition cost. So it is also important for us to record the cost of the assets that we bought. Okay? And I think that's all for the accounting concept and principles. Again, let us go back. The first is the accrual basis accounting. So kung kailan nangyari yung transaction ay doon natin i-record. Going concern assumption that the business will continue and doesn't have a definite time or date when it is going to be dissolved or closed. Basic entity principle, the money of the business is different from your money. Okay, so you must have different recording system. And periodicity concept is when there is an equal time or period when are we going to make the report. And monetary assumption that we are going to use the Philippine peso currency. Matching concept, if you record expenses, you must also, if you record income, you must also record expenses, the cause and effect. Okay, revenue recognition principle, expense recognition principle is kung kailan nangyari yung revenue or kailan nangyari yung sales or even yung expenses ay doon mo siya i-record. Historical cost is the recording the amount of the assets that we acquired. Okay, and again, thank you for watching and thank you for listening to our lesson for today and hope to see you again next meeting. Goodbye and thank you everyone. Hope to see you again next time. Goodbye.